In 2024, the average American household earned $59,000 a year. And the average American household also spent $61,000. That gap, just $2,000, is the distance between treading water and drowning. This isn't a story about lazy people. This isn't a story about bad choices. This is a story about a system that makes escaping poverty nearly impossible, and the hidden forces that keep people trapped no matter how hard they work. The myth. Let's start with the myth. The one you've heard since you were a child. The one that says if you work hard enough, you'll make it. It's called the American Dream, and it's one of the most powerful stories ever told. But the data tells a different story. A 2023 study by the Pew Research Center found that only 43% of Americans born into the bottom income quintile ever escape it. Not half. Not most. Barely a coin flip. And even those who do escape, most don't make it past the middle. This isn't because people don't try. Americans work more hours than almost any other developed nation. The problem isn't effort. The problem is structure. Beneath the surface of every success story is a conveyor belt of hidden mechanisms, economic, psychological, social, that pull people back down the moment they start climbing. And the first one is the most insidious. But what really keeps people stuck? It's not what you think. It's something quieter. Something that hides inside the very experience of being poor. The scarcity trap. In 2013, two behavioral scientists, Sendhil Mullainathan and Eldar Shafir, published a book called Scarcity. Their research revealed something that changed how economists understand poverty. They found that scarcity doesn't just limit your resources. It hijacks your mind. When you're constantly worrying about rent, about food, about that car payment, your brain allocates what they call cognitive bandwidth to survival. And that bandwidth comes at a cost. In one study, they tested farmers before and after harvest. The same person, the same brain. Before harvest, when money was tight, they scored the equivalent of 13 IQ points lower than after harvest. 13 points. That's the difference between average and below average. Not because they were less intelligent, because they were less free to think. This is the scarcity mindset, and it creates a vicious loop. Poverty causes bad decisions. Bad decisions deepen poverty, and the cycle accelerates. You can't plan for next year when you're surviving next week. You can't invest in a future when the present is consuming everything you have. Now, here's where it gets uncomfortable, because even if you escape the scarcity trap, even if you start earning more, the system has another trap waiting. The cost of being poor. This is the part nobody talks about. The cost of being poor. It costs more to be poor than to be middle class. Not emotionally. Literally. In dollars. If you can't afford a security deposit, you pay month-to-month rent, which is 15 to 30% higher than a lease. If you can't afford a car, you take the bus, which takes 2 extra hours a day you could have spent working. If you can't afford bulk purchases, you buy small, which costs more per unit. If you can't afford a bank account, you use check cashing services that charge 3 to 10% of every paycheck. And then there's credit. When you have no credit history or a damaged score, you're locked out of low-interest loans. So you turn to payday lenders who charge 400% annual interest. A $500 loan becomes a $2,000 obligation. One bad month becomes a 2-year debt spiral. This is the poverty trap. Not a mindset. Not a character flaw. A math problem. A system where every economic decision poor people make is more expensive than the same decision made by someone with money. If you're finding this valuable, hit subscribe. We break down the hidden forces behind money, power, and the systems that shape your life, and we're just getting started. The one break rule. But here's the thing that makes the poverty trap truly inescapable for most. It's what researchers call fragility. When you're poor, you're fragile. Not weak. Fragile. The difference is critical. A fragile system doesn't collapse because it's poorly built. It collapses because it can't absorb a single shock. The middle class has a buffer, a savings account, a credit card, a family member who can help, a car that's paid off. When something breaks, a job loss, a medical bill, a divorce, the middle class absorbs it. Maybe painfully, but they absorb it. The poor have no buffer. Every day is balanced on a knife's edge. And one event, one car repair, one illness, one layoff, tips the whole thing over. Reddit forums dedicated to poverty finance are filled with stories like this. People who are finally getting ahead. Finally saving and finally seeing a path out. Then the transmission blows. The insurance lapses. The rent goes up. And years of progress vanish in a single afternoon. This isn't rare. It's the norm. The Federal Reserve found that 37% of Americans couldn't cover a $400 emergency without borrowing or selling something. Not $4,000, $400. That's one bad day between stability and crisis. So the question becomes, if the trap is this deep, this systemic, this well-engineered, is there even a way out? And the answer is yes. But it's not what the self-help books tell you. The real exit, here's what actually works. And it has nothing to do with motivation quotes or hustle culture. First, cognitive bandwidth. You have to reduce the number of financial decisions you make daily. Automation isn't a convenience for the poor, it's survival. Auto-transfer savings, even 5. Auto-pay bills on the day you get paid. Reduce the decisions that drain your mental bandwidth, and you free up the thinking power to make strategic moves. Second, community economics. The most reliable way out of poverty isn't individual effort. It's collective resources. Shared housing reduces rent by 30–50%. Community land trusts make home ownership possible without banks. Mutual aid networks replace payday lenders with zero-interest loans. The individualist narrative, just work harder, is the trap itself. Third, structural breaks. Every person who escapes poverty has at least one structural break, a moment where the system, not their effort, gave them a boost. A scholarship. A mentor who opened a door. A landlord who gave them 3 months' grace. A union job with benefits. These aren't luck. There's evidence that escaping poverty requires intervention from outside the trap. The uncomfortable truth is that the poverty trap was built by policy. Redlining kept black families out of homeownership for decades. Welfare reform created work disincentives. Tax structures reward wealth and punish labor. Education funding tied to property values means poor kids go to poor schools. You don't escape a trap by running faster inside it. You escape it when someone opens a door. Most people never escape poverty. Not because they're lazy. Not because they're stupid. Not because they don't want to. They don't escape because escaping requires breaking through multiple traps, cognitive, economic, structural, that were designed to hold them in place. The scarcity mindset. The cost of being poor. The one-break fragility. The policy architecture that rewards accumulation and punishes survival. These forces don't work independently. They work together. A system of traps that reinforce each other. Understanding this isn't just intellectual. It's the first step toward dismantling it. Because once you see the trap, you stop blaming yourself. And once you stop blaming yourself, you start looking for the door. The truth is rarely simple. In this case, it's a complex, devastating mix of economics, psychology, and policy. But it's not invisible anymore. And that's where change begins. Make sure to subscribe to Capital Depth and hit the notification bell. We uncover the hidden forces behind the world you see today, and this is just the beginning. Let us know in the comments, what other hidden systems should we break down next?